Good afternoon. Happy Monday. Welcome to Trading the Close. I'm Toni Valliere, and here is what is making headlines today. After months of negotiations, Hamas has approved a ceasefire proposal to halt the war in Gaza. We'll take a look at how the news is impacting the price of oil. Tyson Foods stock falls after sales miss estimates. Chicken prices and volume have declined as beef and pork are seeing prices and volume rise. Spirit Airlines stock declines nearly 10% after the airline reports a quarterly loss and weak guidance. Robinhood says the SEC could pursue enforcement actions over its crypto operations. Robinhood, by the way, is set to report its quarterly earnings on Wednesday. And Palantir, Lucid, and Microchip are among the companies reporting earnings. That will be after the bell today. Stocks started the day off in the green, so let's get a check of where things stand right now, just minutes before the closing bell on this Monday afternoon. We're seeing the Dow up over 100 points, 0.28% right now. The NASDAQ up over 153 points, 0.95%. The S&P 500 also in the green, up 43 points, 0.84%. Oil even up just slightly, 65 cents, 0.84%. Gold is up $22. Bitcoin down over $800 at this time. So let's bring in Chief Market Strategist Gareth Soloway with a recap of today's trading.
Yes, so today I think the name of the game is light volume. I think everyone's a little hungover, not that we drank on the weekend, of course, but
I don't know what you're talking about, Cinco de Mayo.
Yeah, but I think people last week, you had the Fed, you had Apple earnings, you just had so much going on.
Yeah.
And there's not much yet in the week. So it was a week where we just started out on Monday with no major headlines, and the markets were just tired. So we opened higher, riding the high of last week's greatness, right? Thursdays and Fridays rally.
Okay.
And really, if we look at the S&P, we opened higher on the day, and it almost did nothing all day. And you're seeing a little, probably just short covering into the end of the day, some shorts that were trying to get some money to the downside. It just never happened, never really pulled back significantly. So you're getting this little bit of a end-of-day short squeeze to the upside. So it's a nice rally in the S&P, but very light volume, like incredibly light volume today. Just not a lot of people participating. Institutions certainly aren't.
Does it have anything to do with things going on in May, like graduation and just people getting ready to,
Yeah, I mean, the old adage is sell in May and go away, but here you have the go away, but the float continuing, at least for now.
Okay.
But it'd be interesting to see if we do see some downside. That's kind of what I'm projecting out. I do think that this kind of high riding from the jobs, weaker jobs data, and some of these other factors, that will likely kind of peter out here over the next couple days. And once we get volume in, I do think we turn back down. But let's take a look at the daily chart, and we'll go to the SPY here. So this is again, really the last 3 days. Look at the tremendous move from where we were. I guess this was Friday and Thursday. So last Wednesday's close right here. This is a very big move, essentially from 500 on the SPY right here, right, to 516. That is a large 160-point move on the S&P 500. Now, a couple ways I analyze this. So first of all, I look for resistance. I was following this little level here, but we've blown right through that, so that takes out that resistance. Then you start looking, there's a gap fill right here on the chart, and that's kind of looks like, and again, sorry, my line isn't perfectly straight here, but that's probably where we're headed. In addition, what I like to do is I like to just test it out using a Fibonacci retrace, because I want to see, is there a major Fibonacci level in this range, taking the all-time high, dragging it down. And what I do see is, and this is interesting to me now, this gets my attention, is that if we look at a Fibonacci retrace, look at that level that I gave before, right? So we're going back to the gap fill, which was right here. And then that's also right around this line here, which is your 786, and that's at 517.69. So 517, the gap fill's probably about 518. So what I do as a trader, I say, okay, the next level, you have to assume it's going to at least get here tomorrow, which is a little bit more upside. I now start saying, okay, now this is the level where maybe I start contemplating a short on the S&P 500, seeing if this level with the gap fill coordinating can pull the market back down.
Is this major resistance?
It should be pretty solid resistance.
Okay.
Number one, the markets are, again, we've now had this huge bounce. Again, 786 retrace is a pretty big retrace of an entire move. If you get through this level here, and we really get above here, you got to start talking about the all-time highs again up in this range. So this is kind of your last bears. This is probably your last big resistance before you hit double top of the all-time highs.
But you ultimately see it pulling back.
I do. I just look at the facts, and again, it's more of a macro view, but just what we have going on. I mean, people are cheering that jobs are kind of faltering. People are cheering that the GDP is faltering. In my head, I say, well, yeah, that's because everyone wants the drugs from the Federal Reserve, the cheap money. But is that really a good thing if the economy is starting to stumble? And what if the Fed can't stop a rollover? What if consumers, we saw Starbucks earnings. We're seeing all these earnings. In fact, one of the stats I saw was that the amount of guidance given by these companies reporting earnings, it's been the most lowering of guidance since COVID. So, I mean, again, it doesn't necessarily guarantee that it's going to stumble, but it starts putting the odds in that favor of where you start seeing this. Another stat that we recently talked about was the insider selling. Highest insider selling over the last 6 months than before the previous all-time high in 2021. And so I just start stacking things up in a line, and I say, well, yeah, I mean, maybe we retest here, or maybe we stall here, or maybe we even make a new high, but at some point, reality comes back in, and we do get that kind of reversion back down in the
ultimately.
charts. Exactly.
Okay.
Exactly.
How about oil? I mean, how much of an impact is this ceasefire?
Yeah, so let's take a look at oil here. Let's go right into that. So at this point, to be honest, not much.
Okay.
And again, I have some things already drawn on the chart
Yeah,
for
I see
everyone
the
here.
head and shoulders.
So, yep, going into today, in fact, I posted this over the weekend on Verified Investing, is that I actually anticipated a bounce in oil. So far, I wouldn't call this much of a bounce. It's a super tiny one, but you had the 50% retrace. So if you look at this low, well, it's off the screen to this high. This is a 50% retrace right here. And then this is also a multiple trend lines of support kind of converging. So just based on that alone, it kind of signals, okay, we should get some sort of bounce. Now, for me, again, if my macro view is correct that eventually the economy continues to slow here, then what we could end up doing is we could chop like this into this would be a retrace to the scene of the crime, right? Here's your shoulder, head, and shoulder. Here's your neckline. We extend that out, you get up to 81, and I probably pull the trigger on a short and look for that next leg to the downside.
Okay, so that's not considered a failure with that bounce.
No, definitely not.
Okay.
No, definitely
if
not.
It were to plummet.
Yeah, exactly. In fact, the head and shoulders is still in play, even if it retraces to the scene of the crime. What would negate it if oil starts trading above that? Then that would negate the head and shoulders pattern that is trying to play out. But really, again, what's so important to understand, and this is something I know you've done the Winning Trader series, but if you look at this, we have let me draw that on.
Count the candles. Yes,
2,
7
3,
is
4, 5, 6, and so you expect the bounce on the 7th, and we're getting that as well.
Yep.
So again, it's all about aligning those factors that give you the higher probabilities of the setup. So I would, in general, I would say maybe a little bit more of a bounce in oil. Whether it goes back here is tough to know, but in the very least, watch that sideways chop, and then assuming we don't get above 81, eventually a rollover down into the lower 70 zone.
Okay, something to keep an eye on. Some of the market movers today, Spirit Airlines was one. It was almost down 10%. Tyson Foods, Robinhood.
It's so tricky with Spirit, right? Because Spirit would be something that, and again, I'm not in it, long or short, but I look at this chart and unless someone buys them out, it's like, man, it's at $3.35 at this point. It's like, are they going to even survive? And that's the bigger question. So this would be a situation, to be honest, where I don't use options very often. But what's nice about options is that you just put a very small amount of money at risk. Let's say you do $1,000. So you might lose your $1,000, but you could also, if they do get bought out and the stock goes up, you could make 500% on your money. So this would be a situation where I wouldn't want to put a significant amount of money into the stock, like $10,000 or $20,000 investing in the stock, because if it did announce bankruptcy, you could lose a lot more.
It's very risky.
Very, very, very select situations what I do with options. This might be one of those scenarios.
Okay.
So it's just kind of an interesting situation there. A lot of people play these zero-day options. That's way too much of a gamble for me. But this would be like, you buy 6 months out and you just essentially you're rolling the dice, but at least the risk to reward makes somewhat sense if something positive does happen. And then if we go to Tyson, Tyson, we day traded today in the Apex Live day trading room. We made money 4 for 4 today in there, so that was a nice little day. One of the levels we were watching here was this low right here, and you can see it comes right down, pierced, and then we had a big bounce back up, so we went long right in this range, went a little bit lower, we dollar cost averaged and got the bounce, so that was a nice little trade. And then really we should look at some of these earnings in the after hours. Let's see.
Yeah, we've got Palantir.
Palantir. Oh, yeah, look at Palantir. So it looks like it did one of those fun whips that we saw so much last week and the previous week.
Yep, we see it here.
Quick drop to 23.80. Now it shot up to 26.40, trading at 26.20. Now, interestingly enough on this, I have a chart that I diagrammed out here that basically aligned some key levels. So we know it's at around 26.20. I have a key level right up here, which is just around 26, I think 50, and then 27.50. So these are two big resistance lines. You have your double top right here, which is this upper line, and then there's a down sloping line right in here. But these will be two key resistance. And then just in case it dumped, I like to have my levels out. A massive dump, you'd have so much support at these lower levels. So it looks like we're approaching the upper range here. We'll have to see if it gets there. Let's flip through, and again, let me just see what level that was. It was around 26.65, and we are currently trading. Yeah, we got close, but now we're kind of trading back down. As of now, I mean, again, the stock was up, I think, 6% going into earnings. It's continuing up a little bit. I know they have some exposure to AI, maybe some excitement there, but it doesn't look, as of now, it doesn't look too crazy. It's kind of settling down now, and now kind of coming back to this flat line.
So entertaining to watch this play out,
it's fast
for sure.
In the after hours.
Lucid and Microchip.
So Lucid's an interesting one. So number one, we know these EV companies are struggling, but Lucid did have, so this is the daily chart of Lucid. It was trading at 220, and 2 weeks before earnings, it just kind of zoomed up all the way to above $3. That always makes me nervous going into earnings, because it's people starting to take gambles that they're going to somehow surprise, in case they get the big bounce. But again, a big move percentage-wise going into earnings, never a good thing. If we look at the 10-minute chart, you can see it is starting to fall a little bit on earnings, back to 295. But again, these are the ones where it may not survive as a company. It may not, and so again, this is it's a high risk play. I try to steer away from those because again, I like to sleep at night versus
Me too. Yeah, me too. So, I get that. I can relate.
So, and then was there one more? I feel like Microchip.
Was,
Let's see what Microchip's doing.
Another one.
It's a little bit of a smaller company. It looks like it's up a little in the after hours on earnings. I don't see any sort of level yet, to be honest, on this chart. But again, let's look at the daily chart here. If we go out, so a lot of sideways chop on the daily chart. Kind of looks like it could be trying to, the one thing I would pay attention to here is, of course, now it's going to stop. I have to redo it here. So you see this flat top? So that would be something that I would kind of pay attention to, that if it does establish above here, maybe it's starting to break out to the upside. So pretty firm, kind of like sideways. This is just really sloppy consolidation, but it is consolidation off of this bigger move to the upside. And so you'd favor the upside on this a little bit. But again, I don't like, I think this is a relatively thinner stock on trading as well, which can be a little bit tricky. So a little bit of looks like a little bit of upside here in the after hours, but certainly not much going on. And of course, I think we should talk about Bitcoin.
Yeah, I want to ask you. I saw Paul did a video, talking about, is this the last dump? Is this the last plummet? Because, of course, we've been eyeballing, at least I have, that 52,000 mark.
Yes.
And we got low, but not nearly that low. And so we saw a bounce over the weekend. Is that right?
Yeah, really pretty remarkable. In fact, one of the things to keep in mind is that if you looked at the stock market, this is when the stock market bottomed as well, with last Thursday, right? So it is very coordinated. Now, granted, the stock market was up today and Bitcoin actually stalled out, but if you look at Bitcoin, Saturday and Sunday, it did go up a little bit. So it's just kind of reversing that Saturday-Sunday little move to the downside. But for me, it's just saying, all right, listen, price is in this sideways channel. And again, it seems like we went up there, we came down to here, then we kind of made our way back to the high end, made our way back to the low end, kind of did a double tap. And so there is a chance we could go back up to here, or you could double tap again. It's just more than anything, I mean, this is what investors in Bitcoin don't want to hear, or any investor. They don't want to hear range bound, because then nothing's happening, right?
Yes.
But it really is. I mean, this is where people just get chopped out, where they see it up here and they're like, oh, it's going to break out, and then it flushes them, and then they get out here, and then it's going to go again, and then it I mean, this is what the algorithms just love. They love this range trading because they can just fake people out left and right. Bulls and bears get chopped up, and essentially their money gets taken. So ultimately, I would say this pattern's generally bigger picture bullish on Bitcoin. It's just a matter of how long it takes before it starts making that bigger move.
All right. Tomorrow we've got Walt Disney reporting earnings, Celsius, Crocs, Ferrari, Wynn, Lyft.
Yes.
Upstart, Arista, Twilio.
Yeah, tomorrow morning. So I mean, Disney did have a nice little move today. I was looking at the Disney chart. I mean, it's a tough one to gauge here. There's a lot of resistance around this 124-ish level here. Let's bring up the chart here. I zoomed out way far out just so we could kind of see back. But you can see right here there was a high, and then you kind of retested it here. You got some trend lines kind of like this. So to be honest, on this one, I don't have a good read. There's just not much there for me to go with. We'll have to see. Again, we've seen like Paramount's earnings. We've seen some of these other earnings haven't been the greatest. We'll see what their numbers are. Netflix also dumped out. And granted, Disney's more than just their streaming, but that's a big part of their business now. And so it'll be interesting to see if they can buck the trend from what Netflix showed us.
You said something that just proves that not every chart is worth bothering or trading.
Yeah.
Because if you
In
can't
fact,
read it
most
clearly, okay,
Yeah.
that's good for people to
Yeah, and
keep
that's
in mind.
important to recognize. Is like I may look at 100 charts and I may find just one that's a high, or maybe two that's a high reward setup that's ready to go. And that's just part of being a trader, right? It's almost like I look at it as like being a fisherman. How you got to sit there off the dock or off the boat, and you may not get catch a fish all day, and that's just part of it, right?
Yeah.
I mean, that's just can you be patient enough not to do something stupid? That's the question as a trader.
That's the challenge.
It is the challenge of a trader, is that most traders can't. Most people that are trying to be traders, they're like a junkie. They're like, I got to be in the trade. I got to get in something because I need that rush. I need that excitement. That's what the market wants. It wants you to do something that you shouldn't do, so it can just take your money and take it from you and put it in someone else's pocket that knows what they're doing, versus if you really are patient and disciplined, the market will give you opportunities.
Recognize the signs and the perfect setup.
That's right.
And then go for it. All right, Gareth, thank you so much. And remember, you can watch Gareth navigate the charts in real time every weekday morning before the opening bell, starting at 9 a.m. His show is called The Game Plan. It airs right here on the Verified YouTube channel. And that does it for us for Trading the Close today. We will be back tomorrow afternoon, so make it a great rest of the day.